because when you buy a stock, you're actually expecting it to go higher. But because the design of the inverse ETF is such that it's designed to move in the opposite direction, so when you buy the SH, you're actually going short now. You're buying SH just like buying any other stock, but because you're buying an inverse ETF, you're actually going short. The instrument itself is a shorting mechanism. Inverse ETFs are popular because many mutual funds and IRA accounts do not allow you to go short. And in fact, this is what is most ironic. Mutual funds, one of the big limitations was that they could not go short. And with the introduction of inverse ETFs, they can actually go short now, but they're not shorting anything. They are just buying SH just like they would buy the Spider or any other stock. So this is how mutual funds and IRA accounts get around the limitation of being able to short stocks. ETFs have indeed become a revolution, and in the following slides, you'll see how big and how detailed the ETF industry has become. To understand how ETFs have made life so much simpler, we look at this table. Let's start with this major indices. Although we can trade options on the SPX, NDX and the RUT, these are very large indices and they're definitely not suitable for everyone. Position sizes can become very large because these indices are trading at 1400 for the SPX, 2800 for the NDX and 800 for the RUT. So it's just like trading a stock of that size. If a stock were trading at $2,500, would you trade in that stock? No, probably not, because that price is very high for a stock, and most investors tend to shy away from stocks once they reach the 400 or 500 level at most. Apple and Google are good examples of expensive stocks. They're both over 500 now, and as stocks go higher, less individual investors are interested in them simply due to their size. But with the SPY, the QQQ and the IWM, we can now trade these indices. This is broad market exposure. So you're getting very broad market exposure when you buy one of these ETFs. And you're also trading in securities that are priced between $50 and $150. And this happens to be the sweet spot for most individual investors. If you wanted to invest or trade in currencies, previously you had to go to the spot or futures markets. And these markets are much more complex to understand.